Hello and welcome to this video on revenue, costs and profit. Now these three terms are really important in business. You won't go far in the business world or in a business qualification if you can't understand the difference between these and be able to work out what they mean. Let's start by looking at a business. Now if we think about the finances of a business, businesses receive money from customers. The money the business receives from customers we call revenue. If you picture a business that you visit, perhaps a sweet shop, something like that, all the money the business receives from its customers, it would class as revenue. Now, in order to provide those sweets, to be able to sell them to you, presumably that business has spent money in making them. And the money the business spends to produce the products we call costs. And the difference between the two, if there's any money left over, we call that profit. And that's what we're going to look at today. We're going to look at these three key terms: revenue, cost and profits. We're going to look at costs in a bit more detail, and then we're going to be able to do, hopefully, some calculations. Now if your maths isn't too hot, do not panic. These calculations aren't too tough. If you follow the formulas and the simple steps, you'll be able to master them, no problems at all. Let's start off with revenue. What is revenue? Well, revenue is the total money coming into the business from sales. And this bit in bold, this definition, is what I would definitely take down in your notes. So revenue is money the business is receiving from selling its products or services to customers, people like you and me. Now sometimes in business, this term can be disguised as another term, and we shouldn't be caught out by this. If you see the words income, sales or turnover, please do not panic. It just means revenue. Okay, so money coming into the business is revenue. How do we go about calculating revenue? Well, we can work out how much money the business has received by using this formula. And I would definitely take this formula down. Total revenue equals average price times quantity sold. And we can use this triangle on the right hand side to work out revenue, but we can also use it to work out price and quantity. So let's have a look at an example. Let's imagine the price of a product is £5, our sweet shop for example, and we sell 400 units, or the quantity sold is 400. Quantity sold, units, number produced, these all mean the same thing. They're the number of physical items that have been made. So what would be the revenue? Well, revenue is price times quantity, how much they charge for each sweet, multiplied by the number of sweets that they make. So in this situation, our revenue would be £2,000. Let's have a look at a second example. Let's imagine this scenario. The revenue we know is £60,000 and the price they charge is £100 per item. So we might wonder, well, how many items, or what is the quantity that they've sold to customers? Again, we can use the triangle on the right hand side. In this situation, we know the revenue is 60,000 and we know the price is £100. So revenue divided by price will give us quantity. So in this example, the quantity would be 600 units. The third example, total revenue is £1 million and quantity is 250. You might want to pause the video for a second and see if you can work out the price. Well, the price, quite simply, would be the revenue over here divided by the quantity would give us price. So £1 million divided by 250 would give us the price, which is £4,000. Probably not sweets in this example, as that would be pretty expensive for a sweet, I grant you. Okay, so that's money coming into the business from sales or revenue and how we work it out. Now we're going to look at money going out of the business, money the business pays, so costs is money the business spends setting up the business or running the business or making the products. These are all called costs, and again I would take this definition down. Again, unfortunately, sometimes business terminology can be a bit sneaky and you might see this word here, expenditure. Expenditure is exactly the same as costs. Again, no need to panic there. So entrepreneurs, people who set up businesses, will look at what their costs are and plan how they might go about meeting them. They'll normally look at two different types of cost, two categories of cost, which we call fixed and variable. Let's look at fixed costs first of all. Now, fixed costs are those costs that do not, and that's important, do not vary with the amount of business activity. By that we mean how many items are actually produced. So these might be rent or salaries or machinery. If we think about a business like this one here, what might be the costs that this business is paying out even though it's not selling any clothes or any jewellery? Well, if we look at the picture, the lighting, for example, that is still a cost the business pays, but it's not related to how many units they're selling. It's something they have to pay even if they don't sell any items. So we call those fixed costs. If there were staff lurking perhaps out of shot here and they were being paid a salary, then that would also be a cost that would be being paid regardless of how many items are being sold. If they don't sell any items, you still pay your staff a salary for being there and working and manning the tills. So that would be a fixed cost. Now, of course, these costs can change. The cost of lighting might go up next year, salaries might rise next year, but in the short term, they're not going to change if you sell one more unit. And that's always the question to ask yourself. Will this cost change if we sell one more unit? And if the answer is no, it's going to be a fixed cost. Variable costs. Variable costs are different. Variable costs do vary with the amount of business activity. So they do change as you sell or produce more units. And this is an important formula that we need to write down. Variable costs equal the variable cost per unit times the number of units. So if we think of an example, football manufacturing, for example, think about what were the costs of the actual football itself, the stitching or the plastic involved. Let's say that's £5 per unit, and if we make 100 footballs, that would be £500 in total. And as we make more footballs, the costs, the amount we spend on plastic and stitching would rise, which makes it a variable cost. Again, take down the formula and the definition from this slide, pause it if you need to, and then we'll move on. So we've looked at fixed cost, we've looked at variable cost. Unsurprisingly, if you add them both together, we get the total cost, how much the business has spent in total to produce the goods and services. Remembering, we also need to do this formula, that the variable cost is on average how much is the variable cost, i.e. per unit, multiplied by how many units have been made. If we look at this diagram, it gives us an indication of what our costs might look like. So as more units are produced, well, the fixed costs wouldn't change, because as we've learnt, fixed costs do not vary, do not change with the number of units you make, but the variable costs would rise. As we make more units, the amount we spend on variable costs would increase over time. The total costs would be both of those numbers added together. How much is spent in total, the fixed plus the variable. And that's it. That's fixed and variable costs. Now let's have a look at, or have a go at categorizing fixed and variable costs. Let's imagine a scenario for a t-shirt manufacturer. What I'd like you to do is pause the video in a minute and decide which of these are fixed costs and which of these are variable costs. Are there any categories there that you think might be a little bit of both? Okay, let's have a look at the answers. So which of those costs were fixed costs? Well, these were the fixed costs. Let's look at the first one, machinery. If you buy a machine to print t-shirts, the cost of that machine, £1,000 say, won't change if you produce 5 t-shirts, 10 t-shirts, 0 t-shirts, 100 t-shirts. The cost of the machine is the cost of the machine. It doesn't vary with the number of t-shirts produced. Interest on a bank loan. Again, if you've borrowed money from a bank and you're paying it back, that won't change with how many t-shirts you produce. The cost will be the same to the business. That's another fixed cost. Salaries. If you pay your staff a full-time salary, then that won't change with the number of units produced. Let's see what the variable costs were as well. These were the variable cost items: raw materials, wages, and power. If you think about it, in a t-shirt manufacturing, raw materials, things like ink and t-shirts, the more of those things that the business bought, the higher the cost would be. So these costs are variable. They do change with the level of output. Right, let's have a go at calculating some costs. In the table below, we've got units of output on the left-hand side. We've got a column for fixed costs and a column for variable costs and a column for total costs. What I'd like you to do is pause the video and see if you could fill in the numbers in the gaps in the table. Well, let's start to have a look at this. Right, if 0 units were produced, what would be our fixed costs? Well, we know that fixed costs do not change with the amount of units produced. Even if we produce nothing, we still have to spend money on things like rent and heating and bank loans and stuff like that. So the fixed costs will be what they are. They'll be £18. Variable costs do change with how much we produce. And in this example, if we're not producing anything, then our variable costs would be 0. So our total costs will be 18. Well done if you got that right. Let's have a look at the second row. If 1 unit is produced, again the fixed costs will be 18. The variable costs, well, producing 1 item now, and the cost per item is £8. So our total costs will be £26. For the third row, if 2 units are produced, the fixed costs do not vary. The variable costs will be 2 lots of 8, which gives us 16, so the total costs will be 34. Here's the final complete table. You can check that against how you did a couple of minutes ago. Right. So we've looked at revenue, we've looked at cost. The final thing we've got to look at is profit. So money coming into the business is revenue, money going out of the business is costs, and the smart ones among you will be saying, well, what do we call the difference? What do we call it if there's any money left over? What do we call it if costs are higher than revenues? The answer is profit and loss. Profit is the difference between the revenue of a business and its total costs. And this is the formula we use to calculate it. Again, this is an important formula that you should write down in your notes. Let's have a look at an example. If we have a look at an example on the left-hand side here, we've got total revenue of £1,000. We've got total costs of £800. So if the business is receiving £1,000 and spending £800, it has £200 left over. And because it's positive, we call that profit. Woohoo! In our other example on the right hand side, example 2, this business is receiving more, £1,200 or £1,200, but its costs are a whopping £1,300. So its costs are higher than its revenues by £100. This would be a negative number. This business has lost £100. Bad news for that business, I'm afraid. So profit or loss is total revenue minus total cost. Now this is important for a business. If you start up your own business, you would be wanting to make a profit. It's the return or the reward that you get for getting off your bum and going out there, setting up a business and taking that risk. The higher the profit that you earn, the more successful we can say the business has been. So there we go. That's what we've looked at today. Revenue, cost and profit. 3 different types of cost, fixed, variable and total, and fingers crossed we should now be able to have a go at calculating revenue, costs and determining whether a business has made a profit or loss. That's it. That's the end.